Hello and welcome to this first carrier update brought to you by Parfleet. I'm here with the one, the only Tony Mulvey. Tony, what are we jumping into first?
So first we've got our outbound tender volume index here in the blue line and our outbound tender rejection index in the green line. So putting them all, the two big indexes on one chart. So why we do this, so you think about OTVI, it's our overall tender volumes, right? Those requests for capacity, it includes both accepted and rejected tenders. Well, let's throw the rejections on there and kind of see how it's moving in relation to the overall volume index. What we've seen, at least over the weekend, we had a little bit of a divergence, right? Volumes ticked up, rejections fell a little bit further. What's that mean? More volume in the market. So, I mean, where we're at volume-wise, kind of in this stable, I don't want to say stable spot, but we're still elevated, right? We're not where we were back in September, October, levels like that. But 14,600 still remarkably high, at least for what were normal, we'd call normal back in the couple years ago.
Right.
Rejections down to about 18.5%. Look at where they were over your shoulder about a year ago, up near 27%. So, that's a pretty significant decline outside of this little spike here around the holidays, which is pretty normal, right? So we've been on this just almost straight down trend to start the year. Not really a surprise. We'll bring up this next chart, which is one that I actually think is pretty important. It's our initial van contract rates, right? So you think about rejections and our van outbound tender rejection index here in the orange over there on the left axis. What we've seen is just this remarkable increase, right? We talk about it, you hear it, contract rates have increased. Well, they're up about 25%. We're at $2.91. Remember, this is just a baseline haul rate, right? It doesn't include fuel surcharges. It doesn't include those accessorials that other spot rates include. So we've seen just this remarkable increase. Notice when all the increases are, though.
Yeah.
They're right before the end of the quarter. In that final month of a quarter, right before the next quarter starts. Well, tomorrow's March 1st. Guess what? Final month of the first quarter. I would anticipate we see this increase a little more, given the fact that rejections are still, 18.33%? We're down, but that's why these move in opposite directions. You think, okay, rejections are down, carriers accepting more freight, right? But they're accepting it contracted freight at these higher rates. So we've seen this gap narrow between contract and spot rates, and that's really what's driving this improvement in rejection rates, and obviously adding capacity to the markets to helping that as well.
Yeah, when you look at all these things, I know you're economic minded as well. It's all like different variables when you start looking at it. Different time frames mean different things. Typically in the past when you saw rejection rates going down and then you saw these increases in volumes, it wasn't always meaning the same thing. But now during this time and period, it's like it all means the context is so much different now.
Yeah, for sure. Anytime you're at these elevated levels, right, these new highs,
yeah.
It does change the context, right? You look at last year, right? If you go back to our last chart where we see that divergence, accepted volumes are up about 3%, but look where they were a year ago.
Right.
They were against difficult comps. So, you're still seeing that freight volume move through the market. And this number has to keep, it's unlikely that it's going to stop. Look at that growth. You don't really see contract rates ever come down, or they go up a lot faster than they come down, right? So, there's going to be a reluctance, even when the market, I don't want to say corrects itself, but does suffer, a little bit of a correction. It has to come down from where it's at, but these will be a lot more hesitant to fall than, say, volumes or rejections.
Got you. So not going to be one of the first movers here that you think?
No, this is going to be one that moves a little later, plus it's 14 days behind the rest of the indexes. But it kind of gives it context of, okay, why are rejections falling? Well, look what contract rates have done. So
awesome. Well, Tony, thank you so much for this update. I'm sure we'll have a few more throughout this morning, but right now we're going to toss it back over to Thomas Watson.